Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. What's going on, guys? It is Friday, October 17th, and that means it's time for the Friday Five. Before we get into that, however, if you are enjoying The Breakdown, please go subscribe to it, give it a rating, give it a review, or if you want to dive deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. All right, friends, back with another Friday Five today. We've got big macro wobbles, weird stablecoin trillion-dollar prints, and a lot more. Without any further ado, let's dive in.
Good morning, crypto faithful, and welcome to the crypto bear market. I'm just kidding. It's not a bear market yet, but if you get onto the Twitter machine, you may believe that it is. We were so back, like a week and a half ago, making new all-time highs. Now it's all over again.
President's got to throw some bombs whenever we get too comfortable, just to shake it up a little bit.
Like he throws the grenade and then it's a dud and he goes and picks it back up. It's crazy. It doesn't even ever blow up, but we suffer from it. Just a funny tweet. Well, what if that anonymous guy was right and 126,200 was the cycle top? The old Reddit thing here that said that it would top on exactly that day. And here we are now back pandering in conspiracy theory. I think that's pretty much photoshopped. And to be fair, Quentin is also the guy who, like on September 15th, went and showed the seasonality chart and dunked that this was the greatest September ever, a day before we went red for September for the rest of the month.
Yeah. I mean, look, ultimately the astrology approach to Bitcoin is always a questionable one. We love it. We love it when it's working in our favor and we pretend that it doesn't exist when it's not.
So we never really got the opportunity to discuss the $19 billion liquidation wipeout because we did our show just hours before it happened, obviously, but we've still liquidated yet another billion since then. So clearly we didn't get rid of all the leverage when almost 20 billion of it was erased in a matter of hours. But here saying that it's a macro stress issue, that we're starting to really trade based on what Trump tweets or truths, trade wars and inflation, all these things. And then interestingly, just before we dive into that, JP Morgan, in a statement of the most obvious, says that the native traders were behind that sharp crypto market crash last week.
Yeah, I mean, it was quite clear that there were catalysts that were from outside and then, market structure specifics from inside that gave it the shape and texture that it had.
Yeah, I think that's very clear. Anecdotally, I have a lot of friends who don't aggressively track leverage crypto markets or altcoins and woke up on Monday and said, wow, it's 112. I should buy some of this. And I have no idea what happened the entire weekend, which was in crypto, the craziest events maybe we've seen.
Yeah, it was interesting because I can't remember what I was doing, but I was like off in family land and I came back at check the Twitter on Friday night before going to bed. And it was just like horror left and right and people like making these bold pronouncements of it, being the worst thing they'd seen since X time. It's so it certainly lived up to its name of flash. It happened very quickly and, it did what flash crashes do, which wiped a ton of leverage out of the system.
Clearly not enough if we've still had $1 billion to wipe out this week, but I had the same experience. I was out to dinner Friday night. I saw Bitcoin price and it wasn't that bad.
Yeah.
Right. And I had no idea that there were altcoins firing off to zero.
Exactly. That's what it felt like if you weren't really paying attention, is that like Bitcoin looked a little bad, but it was coming on the heels of the Trump post. And so you're like, yeah, whatever. You kind of expected some version of that. It wasn't shocking, especially because, one of the upsides and downsides of crypto as the 24/7 asset is that we get to digest news that happens off market hours before anyone else does. And so, that wasn't weird. To your point, though, what was crazy is everything else going nuts and actually literally dropping to zero at various points throughout the crash.
We have this incredible ability in this industry to, like, when things seem to be going well, throw the shell in the shotgun, load it up, put it on our foot and fire. No industry is better at the self-own than the crypto industry. I just want to mention very briefly, like from a technical perspective, on the daily, a lot of people are looking at these, it's below the 200 MA on the daily right now, hasn't closed, hasn't been there since April. But I think kind of a line in the sand I continue to see is this 50 MA here on the weekly. It's been tested a couple times and it's at 101,700. But if you scroll back, it hasn't been below that line literally since March 2023. So these are kind of bear market indicators. We've talked about the fact that none of them have fired. We're getting close to some of them potentially firing.
Yeah. No, I mean, I think it's interesting. Look, a lot of the idea of momentum heading into the end of Q4 is really narrative driven and self-fulfilling prophecy. It's happened so frequently, people see it. They're looking for reasons to have that repeat. So these things could actually have a more deleterious effect, because of they run so counter to the narrative, and especially if some of those indicators get breached, that really contributes to that sort of like negative, counter positioning narrative. So it is not impossible, as sad as it is, for a thing which ultimately wasn't all that big a deal and was relatively temporary, to actually undercut momentum for the entire sort of, Q4 move. I would say that the thing that would worry me a little bit about, if you think that that's a possibility, is the fact that, that JP Morgan article was kind of like, well, duh. But, the fact that TradFi is going out of its way to basically remind people like how junky and little and stupid we are, like, whereas everything throughout the rest of the year has been, all about it coming together and it being real and mainstream. And, you take that with another story that we'll get into of Paxos printing $300 trillion,
Mm.
which is like, the biggest number that we've heard that hasn't come from someone from OpenAI's mouth recently.
Let's
Yeah.
just do it. Listen, we don't have to go in the order that we never even discussed anyways. Paxos burns 300 trillion worth PYUSD. It mistakenly minted, issues official statement. There's so much to unpack here. First, like, if you ever had any doubt of the level of centralization of stable coins, ta-da, you can mint them, you can erase them. They don't actually need to be backed clearly when you're minting them, which leads huge questions to the Genius Act and how it can enforce these things. There's just really a lot to discuss here. I'm surprised, to be honest, that you can fat finger extra zero or two, and you can mint these without some sort of fail-safe that says you don't have the assets behind these to mint them. That seems like a
Yeah.
very obvious mechanism.
Yeah, I would say that in this case, my unsolicited, unpaid for PR advice would be to probably actually explain how the hell this works and do whatever you can to like make it transparent, because oops, we had a technical glitch doesn't really cut it when you're talking about like just 300 trillion showing up.
And they were apparently fixing an error from the morning.
Yeah,
It was like they accidentally burned 300 million, so they had to mint 300 million, something like that. I don't know the exact numbers, and ended up minting 300 trillion. So clearly they can just fix the error, but kind of speaks to the lack of decentralization and the ethos of crypto that many people are here for. Listen, Paxos is a great company. I don't want to spend the time dunking on them. I just think that there should be ways that this is prevented. Just shouldn't be able to happen. They don't have 300 trillion in the bank last I checked.
I think, look, it's sort of one of those things that's obvious to say. It's easy to backseat drive on this stuff, but like the reality is stable coins are now on a one-way path to core global financial infrastructure, not just for our industry. Like whatever systems people have to not have things like this happen, quintuple them, right? Like sextuple, like do them 300 trillion times to make them better and more robust, because I can't even begin to describe how enormously negative I think that story headline shows up on the desks of people who are just starting to not think we're a bunch of clowns. And especially maybe we don't care.
Stable coins. It's the one serious thing we have that's
no one cares like that. No one cares about some random coin going to zero on Friday night when no one's paying attention. But this is a bigger deal.
Yeah, I think so too. It's a bit of a PR nightmare that hopefully will pass because we have the attention span of ants.
Legacy internet and infrastructure are brittle, plagued by downtime, coverage gaps, and outdated financing models. Communities and builders are left behind while capital sits locked out. Althea is changing that. Since 2018, their technology has powered resilient, sustainable networks across the US and abroad. With Althea L1, they've built the world's first blockchain purpose-built for utilities and telecom, turning infrastructure into a transparent, investable asset class. Through liquid infrastructure, networks can now be financed in real time, operated more efficiently, and scaled to meet the $3 trillion telecom and utilities market. This is fintech for infrastructure, connecting capital directly to builders and returning revenue seamlessly to funders. No middlemen, no bottlenecks, just sovereign, resilient infrastructure that works for people, communities, and investors alike. Learn more at althea.net and find them on Kraken to join the future of infrastructure finance.
This is kind of a brief one, but I think it's worth mentioning. BlackRock CEO says tokenization will reshape global finance. Also this week, BlackRock announced that they're going to be building their own infrastructure and platforms for the tokenization of real world assets. And anybody who's been paying attention knows that in the same annual letter years ago, where Larry Fink wrote about Bitcoin spot ETFs, he also wrote about the tokenization of everything. So there's nothing new here. It's more of just a very clear signal of where the puck is heading and where we need to skate, or where the world is skating.
Yep. No, I mean, look, he has been beating this two-part drum from the beginning. I think that more than any other human on the planet, Larry Fink should get credit for obliterating the Bitcoin versus blockchain narrative. When they first announced the Bitcoin spot ETF, every interview with an Andrew Ross Sorkin type tried to get him to get into that same old tried, and true territory of, well, I really like the underlying technology, but Bitcoin and blah, and he just rejected it firmly, has continued to reject it. And what we're seeing now is them not just, again, we're out of the talk phase as much and we're into the action phase, and BlackRock's going after this. They don't just theoretically think this is a big market. They are putting their money where their mouth is, and they're going to be a player there.
Yeah, and imagine if they have the same level of success with their tokenization platform and plans as they have with the Bitcoin spot ETF, which is their most profitable product of all their products, and reached roughly 100 billion AUM, the most successful ETF of all time. And look how much of the market share it's eaten. So let's extrapolate forward and say, how much of the tokenization market share does BlackRock eat?
The thing that BlackRock believes, I think very strongly, is that I don't think that they are thinking about it as how much of the tokenization market can we eat. I think they're thinking about it as how much of the regular market does tokenization eat. And that's what they're positioning for. And I think that their answer is somewhere near around 100% in their minds. To me, I think that Larry's, the way that he talks about Bitcoin is sincere. I think he's come around to it. I think he may not feel and share all of the sort of concerns that core Bitcoiners have, but I think that he gets them and he understands that there's a big and growing block of people who have those concerns, and he understands where Bitcoin fits. I think their Bitcoin play is an amuse-bouche for their big play, and it's this. I think that they believe, because it's incredibly obvious that if you tokenize things, it creates an entirely new world of financialization opportunities for them. And that's what they're going after.
Absolutely. And I'll tell you what the United States government is going after. It's billions and billions in Bitcoin from foreign countries and entities that has very little to do with American. But damn, if we weren't going to strategically build a Bitcoin reserve, here we go. We don't need to buy anything. We don't need budget neutral anything. We've already got over 300,000 Bitcoin, according to Crypto Quant here. We'll see if that's actually true down the road. I mean, this is absolutely wild. Cynthia Lummis proposed us getting to 1 million Bitcoin, already at 316,000 without even breaking a sweat. So there's a lot to unpack here. This scam is awful. I don't comprehend in my mind how a Chinese citizen can effectively open a sweatshop in Cambodia, where he reportedly basically was running a slave ring of thousands of people who are spending their time catfishing old people around the world, getting them to go to a Bitcoin ATM and send money, but making $30 million a day and purportedly maybe $30 billion in Bitcoin, 15 billion of which is now less, of which has been taken by the United States government. The scam itself blows my mind. And what additionally blows my mind is how the DOJ has any authority or jurisdiction here, and how these Bitcoin could possibly be the United States' and not that old lady in France who got catfished.
Well, I mean, that's the big debate. So this is now, it's not just the biggest Bitcoin seizure of all time. This is the biggest criminal seizure ever across anything. I mean, this is the debate of the strategic Bitcoin reserve. And that was what was sort of re-triggered this week is, who does this Bitcoin belong to? Now, the people who are bullish on the idea of a strategic Bitcoin reserve, basically what they're saying is that done well, what should and likely will happen is that there will be a process set up whereby victims of this can place their claims and try to get restitution. But the value of having an SBR, or at least sort of the type of rules that we have around it, is that instead of the government being forced to go dump thousands of Bitcoin on the market, it can keep that part that is unclaimed. The nuanced take is that there doesn't have to be a strict either or, of people who, it's stolen twice, basically. There can be systems set up to get it. look, it's unrealistic that the government is going to spend the next 20 years hunting down every victim of this thing and
No,
trying to change
it's not
that.
going to happen.
It's
This is
got
our
to be
strategic Bitcoin reserve. Yeah, I mean, so Chinese man goes to Cambodia, steals Cambodia man's car. DOJ finds car, our car. Tell
I
me
mean,
how it's not that.
there's a great comedy skit from James A. Caster about Britain stealing things from around the world and basically keeping them on the
British
on the
Museum.
premise of finders keepers. So, it's worked for a long time.
Yeah, the entire British Museum is the British Empire's bounty from stealing from around the world. But yes, the next topic here is to actually get into some of that macro that is apparently driving crypto markets, or at least has been a catalyst for a bit of this downturn. Obviously, we've got Farmageddon, Trump's trade war and shutdown are crushing the heartland. 8 in 10 farmers believe U.S. is on the brink of another 1980s style farm crisis. Of course, we had the catalyst for the 19 billion liquidation, which was Trump truthing the 100% tariff on China, saying he's no longer meeting. There's no point. Just kidding. Those aren't going to stand. And also, just kidding. We're not actually in a trade war. But Donald Trump said we were in a trade war 2 days ago. I mean, we can go through all these stories, but basically we're doing that back and forth. They're the enemy, they're the friend. We're not meeting, we are meeting. The tariffs are on, the tariffs are off. And depending on who you listen to in the administration, we are or are not in a trade war.
Yeah,
Yeah.
I mean, look, one of the things that we're still just not used to because it's so novel in some ways is this White House explicitly uses the press and media as a negotiation tactic, as a tool, like more so, way more so than previous administrations. Messages get tried out live to see how people respond. They're very comfortable moving back and walking things back. Even the sort of the surprising candor of, well, we're already in a trade war and not really caring about the consequences of that. These are both personal stylistic things, but they're also tactics. And, you can see this, I think, with Besson is the one to watch. Like, he's sort of the one where there's like a strategic crafting of how they're going to use public messaging to try to sort of send signals and change things. But we're just back in volatility mode as the sort of story shifts every couple of hours based on new tweets. And that's, a rough place to be.
Yeah, I guess we'll see how it all shakes out. I for one, don't think that, Bitcoin is crashing because of tariffs. But I do definitely think that it gave a really good excuse for somebody to break our market. But I think it is fair to say that there's a lot of uncertainty once again in markets. It just has become so par for the course to me that I find it hard to react to any of this when you know that there's going to be another tweet following it up 6 hours later that someone contradicts it.
I can't remember what outlet it was, but there was one of the majors this week reported that their sources inside the Chinese government suggest that the Xi government thinks that Trump's Achilles heel is caring about the stock market. They think that basically he is in a position where he can't sort of have this sustained negative pressure for too long. The counter argument is sort of an underestimation of how fast we get anesthetized to these things. Part of the reason that this one hit is that we haven't had a trade bubble for 6 months, or really, we haven't had to really care that much about this. And so we were kind of due to forget all of that and be all nervous again. Plus, you got to remember, it's coming into a context where, like, the talk about AI bubbles and the AI propping up the entire economy is louder than it's been at any point since ChatGPT launched. There's a general insecurity around how fragile the foundations of both the market and the economy are. And so it's not a siloed kind of event. It's just, it's a Jenga block that makes the tower wobble a hell of a lot more.
Indeed. So we have a couple more stories. I know we kind of went to like the Friday 6.25 or something like that, but they're all intertwined to some degree. I just found this one really interesting. Tom Lee saying he thinks the crypto treasury bubble burst. This is the same Tom Lee who has become the Michael Saylor of Ethereum, owns 2.5% of the Ethereum supply. Says he has no concern about Ethereum or the price of the assets, but that the crypto treasury bubble has burst. Listen, it's obviously true. To anybody who's watched the charts of the majority of these, it's just interesting coming from the guy who's leading it. So I wonder if, this is a shot at the competitors and saying, much like the internet bubble burst, the biggest companies in the world still emerged from the internet bubble. Maybe he's saying focus on strategy and Bitmine and the other big ones.
I think that's a part of it. I think that the other part is strategically, one of the ways to not have a bubble really overinflate and burst in chaotic ways is to let out air along the way up. And claiming that the bubble has burst is sort of, again, an act of self-fulfilling prophecy a little bit that, potentially tampers down expectations. Like there's a lot of value in that. So I think there's probably a variety of different sort of strategic pieces going on. I certainly think that Ethereum and Bitcoin stand to do better in the context of people not just looking for, the 10th asset to be a new treasury play. So, there's reasons why he in particular would be sort of interested in this narrative.
Yeah, and we've seen treasury companies' crypto holdings on a pretty steady decline since August. I don't think that's particularly surprising. I definitely don't think this trend is over, but I do agree that the initial hype wave, like everything in crypto, every time we get excited about anything, has died down.
Yeah.
Right? I mean, listen, the DeFi summer, NFTs, metaverse, whatever. Nobody's saying that NFTs will never exist again, but the first iteration and bubble of them popped. This may be the same sort of thing.
Indeed.
Okay, next story we got here, and I'm going to require your unpacking because this went on the I just can't process all of this information in 1 week bin for me. It's up on the shelf. Binance listing fee drama goes nuclear. Binance halted trading, faulty, and this. So, okay, I guess there's two Binance dramas, right? There's the what happened in the $19 billion liquidation. Was Binance somehow involved? We do know that Binance broke. They admitted it. They've been actually refunding people. And then there's the Binance listing process drama that somebody effectively doxed what Binance asked them for to list a token. And then Binance customer support came back with that's not true. We're going to sue you, bro. So a lot of Binance drama this week.
Yeah, I think that you're right that this was the reason that it got as dramatic as it did is that there was two things sort of happening at once. The listing thing is the one that, so the reason that one got a little louder is in addition to someone sort of, sharing what they had been asked to give, which felt very 2017 to a lot of people, you had, folks coming out of the woodwork being like, guys, of course, that's what Binance has done always, and so you had a chorus of, influential large accounts basically piling on and saying this is just what Binance does. You had, some loud statements about how bad for the industry Binance was and, all this sort of stuff. I don't know. It's the type of stuff that we only talk about when markets are going bad is sort of the short of it a little bit. But I don't know how much we're going to care in a week. I think that'll be largely based on whether number is going up or down.
Yeah. It'll be forgotten. And to be fair, every exchange I've talked to effectively has had these issues. I can say that certainly with liquidations and leverage and things not working appropriately, right? I don't know, Coinbase goes offline. I don't know that they broke and started liquidating people at zero, but there were issues across the board. I actually use Arch Public to buy Bitcoin for me, and it's on Robinhood. And since they don't have an order book, it was actually orderly and they just filled everything. But that might be the exception to the rule. And once again, there's a spread, not an order book. So the mechanics are different. But some people did kind of survive the volatility, I guess.
I don't know. It had the feel and flair a little bit to me of we haven't had a good old dust up for a minute, and this served as well as anything else.
Yeah, I think as we conclude here, one of the more interesting takes that I heard and thought about is that we view these liquidation events like this and these exchange failures as black swans, but they're just swans.
Yeah.
This is normal.
They're not even swans, they're Canadian geese, man. They're constantly flying over and honking.
Yeah, and I just think it's important for people to take the view that this will be a common occurrence to any position that you're holding on one of these. I don't know how you handicap that in your risk management strategy, but you need to.
Yep.
You need to understand that even if your stop loss is there, if your stop loss is past where the market makers have their bids stacked, you could fly right through it and not even fill. Like I said, so you can have all the risk management in the world and you get liquidated at zero. It happened.
Yeah. No, I mean, look, it's this is why I don't trade, because I would just get hosed left, right, and center.
Yeah, I only trade in the I've got it automated to make some money and buy a lot of Bitcoin as low as I can.
There you go.
I would love to. I actually am. There's a deep part of me that wants to see $90,000 Bitcoin now. I have some money that I want to buy Bitcoin with, and I have been buying it on the way down, but I am holding it for the next 5 to 10 years or 100, probably never selling it, but I'm not selling it anytime soon. So please
I actually think that if every catalyst isn't just straight pointing down, but we dipped into the 90s, I think that it could be a pretty like counter indicator where a lot of money would pile in just for the like first buying chance under 3 digits for a minute, that could send it right back up the other way.
Yeah, I mean, how many times have we heard Bitcoin hasn't traded below $100,000 in, I don't know, 150, 180 days, whatever it
Yeah.
is.
105
Usually,
feels low, 90 feels like a bargain sale.
yeah, I agree with that, and I'm definitely all in there. Sorry, kids, your toys are being sold for Bitcoin. All right, guys, that's all we've got for you today. Another great Friday 5. You should check out the breakdown by NLW. Of course, he goes into these topics very deeply on a daily basis, and it's where I steal all of my ideas from. So anything you hear that I say that's smart probably came from this guy. Thank you, man. Really appreciate it.
Later,
Everybody, let's pray that at 5 p.m. today, Trump doesn't say 200% tariffs and we get a $30 billion liquidation event. That's all we got. Thanks, man.
Bye.